All right, traders, within this video, we're going to be doing an in-depth price action analysis on the stock market. We're going to be going over the SPY. We are also going to be reviewing the top stocks that I'm watching this week, including BBY, Snapchat, Amazon, Tesla, Robinhood, Mara, BBIG, DWAC, KSS, Facebook, SPY, of course, PTON, Lucid, right? And Pfizer. We have quite a few stocks to go over. This video is going to give you an in-depth price action analysis. It's going to give you a better understanding on when to be bullish, when to be long biased, when to buy the call options, when to be bearish, when to be short biased, when to buy the put options. It's going to give you a better understanding on where the short-term direction is headed for this stock and how you can visually tell on who's in control, whether that's going to be the bulls or the bears once we get these reactions and confirmations we're going to be looking for at these key specific levels. So make sure you smash that like button. I'm going to be recapping the trades that I ended up making today. I finished today very, very strong. Going to be recapping those towards the end of this video. So make sure you stay to the end, guys. It's going to be a very important lesson, and let's get right into it. So first things first, we're going to be going over the SPY. So the SPY has been developing a price channel for about 3 days now. Just to kind of recap on what has happened, you know, SPY had major support right here at 456. Once it cracked this major support at 456, it dropped all the way into the 420s, which was an overreaction for the short term being. Therefore, it spiked back up, and ever since it hit 456, it has turned that key 456 support level into a resistance level so far, and it is consistently forming new lower highs, which is bearish, and that means the bears are still in control for this whole macro move. However, the bulls have been combating forming a higher price channel. You could see your previous resistance on the SPY was at 444, and whenever SPY hit the 440 to 440 level from this downfall of 456, it would quickly pull back into $430 to $426 range. Now, you can see SPY tested that key previous support level. The bears came in for the macro, took it back down all the way to 440.40, but that previous key resistance level, that previous top of that lower end of the channel, is still reacting as a support level, which is still bullish for the SPY from a micro point of view, from a short-term point of view, because it had a breakout past this channel of 420 to 444, and it has been turning it into support, meaning if the SPY continues to stay above this 444, it is going to be on track to break out of its channel, and the current high end of the channel is going to be $453. Once SPY goes above 453, that's when it has a gap breakout, and that's when it fills this gap here at 457.35. Now, in terms of reviewing this 3-day channel and kind of where we're at, if we were just to, you know, kind of view this channel. So it's been 3 days now since we've been trading in this channel. In terms of what has the SPY been doing, it's been topping out at 452. It's been breaking down, hit the key 440 level, forming new lower highs, and it's trying to break back down. That is what it's currently doing. I do believe this is going to be quite the battle for the micro. I don't think SPY is done just yet. I think we'll be able to see at least, you know, a 452, a 453. And if that can break out, then this will be on track for 457 this week. For the bears to really take control of the micro, what they need to do is they need to crack this 444 and turn it into resistance. That's what needs to happen. In terms of where I kind of think we're at, I don't think it's done just yet. It could be, you know, something similar like this, where it's just kind of sitting, it pulls back a little bit, then it rips back up, and that rip back up could be to 452, or it could be to fill this gap here at 457. Then it just sells off hard again. That's where I kind of think we're at in terms of the SPY. I don't think it's done just quite yet. As of now, I really have no interest in making any trades on the SPY, but I do have some very important trades that I'm planning to make tomorrow towards market open. We're going to be going over that here shortly, and we're going to be recapping the trades that I made. I had a killer trade on the SPY today. I literally bought puts right here at like 3:23 p.m. I bought puts when this was at like right around like 450. And this sold off very, very hard. It dropped all the way to 446, made a 44% return in about, you know, 16 minutes on those. We're going to be reviewing all my trades towards the end. But let's go over the top plays that I'm watching for tomorrow. So I did a YOLO trade. We'll see how this works out. This was a complete lotto, so I took a somewhat small position on a Pfizer. I ended up buying a Pfizer call option right here on the dip into the market close when this was trading at like 53.20. I bought the calls, currently up 6% on those as it had a nice little spike into the close. Now that it's up in after hours, those are going to be worth a lot more because this closed at 53.21. It's currently at 54.10. Earnings drops tomorrow. We'll see what happens. Anything can happen. It's a complete lotto play in that sense. In terms of the chart, in terms of what I was reading on, the earnings are expected to be extremely bullish. And in terms of the chart, what I was looking at personally was there was a gap to fill right here at $53. Ever since it has filled this gap, it's been breaking out, turning it into key support. You got bullish candlesticks right here, bullish dojis coming in at the key gap close reversal level, very strong support channel. And you have a gap to fill above right here at 59. You have a gap to fill above right here at 61. And this is the type of stock that can potentially have a very nice move on the upside with earnings like it has done many times in the past. So that's kind of my thoughts on that. In terms of key levels, if this can break above this $55, there's a gap to fill 55. If that breaks out and turns into support, this can rocket to 57 to 58. If that reacts as a resistance, it's going to be a hard sell to lock in profits. So we'll see. But it is up nicely in after hours so far. So we'll see how that reacts as of tomorrow. So I am going to be interested in playing puts for tomorrow. I'm looking into Robinhood puts. So we got the first red day, right? So we got the first red day on Robinhood. I'm thinking we see some continuation. I think this is going to, open up more towards red. What are the best prices to buy puts on these, stocks? The previous closing price, $13.91. That's your best price to buy puts. Focus on buying puts towards around that range. I think Robinhood is due for a pullback to around $13.30, right around $13.30. The overall chart is beginning to look bearish. It looks like it's really setting up for some nice downside coming soon. And I think now is the time to really start grabbing puts on Robinhood. In terms of more updates in another stock that I'm liking puts on, there's been a whole delay with this DWAC situation. And with this one, I think in terms of where we're at is something like this. We got this bearish candle coming in, and then we have a red day coming. I think we got some red coming for DWAC. So with that being said, the best price to buy puts would be the previous closing price, $83.88. I personally think DWAC is going to be having a nice red week overall in terms of how low do I think it can go. I think this stock is going to be really on track to fill this gap. There's a gap to fill right here at 68.75. That will come within some time. In terms of short term, once we crack this key $81 level, we should see a nice pullback to about 73 to 75 a share. Within 2 weeks, I could see this gap filling at $68. I think personally now would be the time to consider swing trading DWAC put options. So that's something I would keep close on your radar, as well as it has topped out at key resistance and there's been a delay in things for the micro, so it should cause further pullback. As for BBIG stock, so the bulls have failed so far. We discussed yesterday how they, were showing some strength, trying to turn 310 into support, and how this was on track to fill the gap. There was a gap to fill at 338. Well, today it almost filled it. It got to 333. Had a partial gap close reversal, tanked along with the market like a lot of stocks did. With that being said, this is still looking very bearish. It looks like we got some more downside potential to come for the short term, where this really does pull back to about $2.80 for the short term, and then we'll see from there. Overall, though, this is setting up very, very bearish at the moment. The bears are really showing some strength here. In terms of other stocks, let's see. So Lucid is looking very bearish, man. I'm telling you, I want to invest into this stock for the long term. In terms of like shares and like more leap call options, I'm really waiting for this gap around $20. I could see this stock going to $21 to $20 within, I would say, like 60 days, within like 60 days. So if it spikes like 20% tomorrow, don't come and like shit on my video, because I said in 60 days, like all the people on a PROG stock did. But anyways, I think within the next 60 days, this stock can see some serious downside to the low 20s, like $22, $21, right around that range. In terms of the overall channel, if 26 cracks, it's going to have a nice pullback to about For the micro, let's see if 26 cracks, we're going to go to 20, around 25 to 24.50 around there. That's something I would consider more of like a midterm on that. Sens is on my radar. For this one, I'm just waiting for the first red day. It's got a very liquid option chain as well. Once this has that first red day, I'm going to consider, you know, swinging out a short position, potentially getting puts as well. I really don't like doing options on the smaller cap ones. Like those, I'll just typically short shares. And in terms of Mara stock needs to stay above this key level right here. It needs to stay above 2503. If 2503 cracks, it's going to fill the gap at 2350. If it holds, it's going to be on track to go to 2650. Overall, I would avoid this for now. It's starting to look bearish at the moment. It did have its nice move up. Now it's starting to look bearish for the micro. Tesla, very important update on Tesla. It's make it or break it for Tesla. It's been 6 days now where Tesla has failed to break above and turn this $940 level into support. It's been nothing but fake outs for about 6 days straight and some lower highs. This is a very bearish candle on the daily daily chart coming in as well. If this doesn't break out soon, we're going to be on track for a gap fill at 846. Once the gap fills at 846, you see it react as support, pick up the call options. That should be a good one. In terms of now though, things are definitely leaning more on the put side if this doesn't run soon. So if you see this, struggling at 920s or 940s around that zone, you're going to want to pick up some puts. Overall, if this can't break above this 940 level here soon, the reality is it's just going to fill the gap at 845. Within like how long can that happen? Like how many days can this go on? By next week. Like by next week, it's going to go to 845 if we can't get above this 940-ish level. If it goes above 940s, it runs to 975. Overall, though, it's really starting to look bearish. In my opinion here, it's really starting to look bearish. And that's really gonna cover it for the most part. The last one is going to be Amazon. I would strongly consider a put option on Amazon. Amazon is looking extremely bearish here. Like guys, I'm telling you, in terms of a chart setup, this is a very bearish setup. So in terms of Amazon, we had this crazy overreaction where this went from $2,766 just 2 days later, going to $3,252. There's a gap to fill right here at $3,242. Ever since it filled this gap, it's been reacting as resistance. You got a very bearish candlestick on the daily chart towards key resistance, towards a key gap close reversal level with huge downside potential for the short term, right? Within the past, 3 weeks, it's went from 3,200 all the way down to 2,700, and then again 3,100 all the way down to 2,750. Like this is due for some downside. It has the major support right here. It has the key gap fill level right here. It's turned it into resistance. This is very bearish, and Amazon is going to really be on track within time to fill this gap at $2,800. So for those of you who are a little more advanced in options and say you don't have a larger account to buy some puts on Amazon for like a swing, I would consider doing like a vertical option on Amazon where you give yourself some time and play a vertical option. Buy some puts, play a vertical option on Amazon. This looks very bearish. It looks like we're going to be heading back to 3,015 fairly quickly once we can crack the previous close. So I would definitely look into some put options on Amazon when it cracks 3,150. That would be the time to get the put options when it cracks 3,150. So that's something I would keep on your radar. Getting a multiple legged option is going to make the contracts a lot cheaper and more ideal for a small account. So like if this were too expensive, say you bought a put option February 18th or February 25th, these would be a somewhat good time. And you stayed like in the money, 3,150, 3,150. Say you did a multi-leg, so you do a vertical on the put side. Those are only $2.15. So yeah, I would definitely look into those for sure. If you're looking for like a passive swing for a put, for a vertical, Amazon would be a great one. So basically the top recommendations in this video right now would be an Amazon put option. Consider a Snapchat put option as well. if it's down. So if you see this down, you know, tomorrow towards market open, the best prices are going to be at the previous closing price. Remember that. And use tight stop losses when you're playing these previous closing prices, because if they break out and turn to support, they're going to rise very, very quickly against you, right? It's a trend reversal strategy. It either works in your favor if it doesn't, or it doesn't. So you get out very, very quickly. Sometimes for the first 30 minutes, they'll trade sideways a bit. But once that move starts kicking in, that one-sided move, that's when you know. But yeah, the best prices to play these puts would be towards previous closing prices. So you can look for Snapchat, Amazon, Robinhood. Those would be the top 3 for put options for the time being. In DWAC, those would be the top 4 that I'm seeing for puts. I'm liking the whole idea for puts tomorrow on those. In terms of PTON has earnings coming out. The chart's a little bit weird. I'm just going to stay away from this one for the most part. In terms of BBBY, it's either make it or break it, man. Like, the volume is fading on this. We still have the squeeze going, but the volume's fading. It did almost fill the gap. It's having a reversal. Not a good sign. Really not a good sign. If you're in on this, the most I would risk is like 1570 to 1550. It really, the key for this is to just stay above this 16 to 1630. But it has a lot to do with the SPY as well in that situation. But yeah, those are the main stocks that I'm interested in. So if I didn't really review any other stocks, I'm just not interested in them at the current moment. And I had price alerts set for kind of on the back, you know, on the back end. But yeah, that's kind of what I'm seeing, guys. That's really what I'm focused on. That's really what I'm seeing right now. Pfizer is going to be very interesting as well. It is currently up in after hours, so we'll see, you know, how those calls do. But in terms of the trades for the day, it was a fairly good day for me. It could have been 10 times worse, but I did a good job of cutting losses quickly and adapting. So like, just for some examples, like 9:46 a.m., I played puts on PTON. The problem with these was they worked in my favor, but the implied volatility was so high as the stock was dropping. If it would have just a little pop, even though it dropped like $1 away from where I got in, the contracts were just barely up or not even up. So the implied volatility really messed things up in that sense. But yeah, 9:45 a.m., which was right here when the price was trading at 31.33, I picked up some put options. My overall target was like towards 29, right around 29 to 28.7 for the day. That was my overall target. Once the implied volatility was affecting me, which was like right around here, we had a nice pullback. And this was ridiculous because I got in at like 91.40 when the price was at 31.40. I got in. It has this nice pullback to 29.60. Then it has this small bounce to 30.20, right? So it dropped $1 from my contracts, and my contracts are down like 1%. And right here they were up 8%, which really pissed me off. And then right here, when it drops for a new low of day, my contracts were only up 6%. And then once it started bouncing again, I tell myself, all right, I just got to get out. I'm going to cut the L, even though I shouldn't be down. But that was just simply implied volatility that happens sometimes. So when the implied volatility is really, really high, it's best to just stay away from the contracts in that situation, especially towards the morning. So that was PTON. I was right in the overall direction. It would have been fine on a short position. I would have made like $2 profit per share on a short for that. So I got to start focusing on share plays too, because that would have been great for shares. And then this is where things started getting interesting. I tried playing some breakouts. I tried a breakout on DWAC. I felt like this can go to $100 today because the volume was just so high on this in the morning. So in terms of DWAC, I got in at 10:57 a.m. and then I cut this at 11:38 a.m. So in terms of DWAC and what I was seeing in this particular stock, you know, before the news came out, there was key resistance, and I should have just stuck to my video yesterday as well, because my video said the best thing you could really do with it is just wait for the first red day. But there was key resistance right here at 91.30 with huge upside. You know, the previous day's high was at 120, so it had a huge upside, nice breakout opportunity at 91. So once I noticed that $91 to $93 was turning into support, I felt the stock can run to about $100 on the day due to the volume spike. You know, looking at its volume, these past 5 days, this was pulling like 9.7 million to 9 million. And today was the day where it had the big volume spikes. That's what really got me excited to buy the breakout on this particular stock. So with that being said, I I alerted the calls right here at 10:57 a.m. So 10:57 a.m. right here, 10:57 a.m. So 10:57 a.m. literally towards the top, and then it had a pullback. And so I bought those calls when this was at like 95.50. And then in terms of the exit was at 11:38 a.m. So why did I decide to sell at 11:38 a.m.? So in terms of 11:38 a.m., that was right, let's see, that was literally right here, this last candle. I literally sold these when it dropped to 93.70. The reason why I sold these is because of all the resistance. You have lower highs here, you have lower highs here. It did get a new high of day right here, but it failed to break out, which is a very, very bearish signal. It did get the new high, it got to 96.55. I was looking for a move to 100. It just couldn't push above. So once I noticed it was starting to break down, and it's failed to break out multiple times, failed to form support, and then it was starting to crack some key support levels at 94.30, that's when I knew to cut it. And I literally cut it at 11:38 a.m., which was right, which was right here before it had a nice downside move to $90. Then it ripped back up to 97.15 for a new high as SPY was ripping along as well. But things quickly turn, and then this is where things get very, very interesting. I tried playing the red to green move on Tesla. So in terms of like, overall losses, like PTON was practically nothing, very small. DWAC was more of the bigger loss. I got in at 560, and then I sold those at 475. That was more of the bigger loss. That's about, I think that's like 10%. So that was more the bigger loss, but I did a good job cutting my losses quickly because that faded very, very hard. Those contracts are probably under $3 right now. But yeah, and this is where things started to get interesting. Around 3 p.m. to 3:10 p.m. I started scalping Tesla. So what I was looking at was on Tesla I was looking at this move where it was trying to go red to green, right? And if it can go to red to green, it can really pump and head back to like 935, 940. I was trying that. It didn't work out. And once I noticed that this was about to go red again, which was right here at where is it? Right here at 310, 320. So I sold for break even, right? So I got out at 320 and then had a small little micro loss before. That was like a 3.33% loss. I got back in, right? So at 3:20 p.m. I got out. The main reason why I got out was it looked like it was about to go red on the day. And when you see that green to red fake out, that's very, very bearish when it goes red again. And I also had stated that the SPY will most likely pull back here into the close, then continue to rally to fill the gap later at 457 this week. We could still see that gap fill at 457. So why was I expecting SPY to pull back here into the close, right? Which is what really led me to getting out of Tesla, because it likes to follow it. And then you could see right here, this was the trade of the day. This is what put me in the green for the day. Because you've noticed like there was a lot of small losses, but that's the point. Like there's small microscopic, like 3% loss on Tesla, small like 9% loss on PTON, a small 10% loss on DWAC. Like they're like small microscopic losses. With that being said, oh, by the way, DWAC, that was like 18 to 20%, so that was more on the bigger one. But with that being said, this really put me green in the day because this was a 44% win. It averaged to be out like a 30-something% win because I sold half. But right here at 3:23 p.m., so at 3:20 p.m., that's when I exited my Tesla calls. And then I quickly adapted. So you got to be watching the market because this is really going to tell you where these stocks are heading as well. So basically, I was looking at the price action on the SPY yesterday. So in terms of SPY's price action yesterday, look what it did. It had a morning spike. Look what it did today. It had a morning spike. It pulled back at around 10:30, and then you could see it pulled back around 10:30. See how it's very similar? And then what did it do? It bottomed out. It ramped up for a new high. It bottomed out, and then it ramped up for a new high. And then when did the SPY sell off? The SPY began to sell off right here at 3:35 p.m. right around that time where I sent that alert at 3:23 p.m. right? So I was looking at this pattern with the SPY, and I was noticing that the SPY is doing the same exact thing it did on Friday. It spikes, it pulls back, it rips for new highs, and then it crashes during like mid power hour. It spikes, it pulls back, pushes for new highs, then it spikes mid for power hour. So using yesterday's chart, yesterday's pattern, is what led to my success to go from red to green on the day and to really have a killer trade. Like that's a great trade. Like it really, like with options, that's a killer trade where you can make 44% in 16 minutes when you get this killer move on the SPY. So in terms of like, ways I was able to confidently confirm that that history was going to repeat itself, just by looking at the whole chart today. The whole chart looked very, very similar. The main difference was SPY went much higher than it did. On Friday, like this had a much bigger high of day breakout than it did, which is even more weakness and even more bearish in terms of today's price action. But just by studying how SPY was kind of sitting here towards the end of power hour, and then SPY was kind of sitting here towards the end of power hour, you have key resistance right here at 451. Comparing the time frames, the timing was very spot on, very similar, where SPY would pull back around 9:20, 9:30 p.m. around there. It's retesting high of day, failing to break out. The squeeze indicator triggered blue multiple times right here. See how it triggers blue. Once it triggers blue at resistance, hard sell off, right? And then once the yellow comes in, then it starts spiking. See the same thing happen with DWAC. Once DWAC triggered blue here on the whole squeeze, see how it's triggering blue. See how the chart on DWAC looks just like SPY's in a sense right here. It's just crunching up towards the high of day, right? Very, very bearish confirmations when it's failing to break out, just slanting down like that. And then you got the blue on the squeeze and then boom, massive sell off, right? So they all kind of follow the SPY down that sense. So me being able to see that pattern and to adapt and to, not only accept the fact that I was wrong and cut my losses quickly, but to adapt, to switch sides, to get in and then do a good job of maximizing the win. Like this is a great job maximizing my win. I sold half just 7 minutes later at 340. So, that's very nice. That's like, I think that's around 20%. And then I sold the rest, the other half at 9:39 p.m. a little bit too soon, but very, very close towards, the high on those contracts at 410. I believe the highest they got to was at like 440, 450. But then it ripped back. So I did a very, very good job at maximizing. Sold the other half at 410 at 3:39 p.m. But yeah, that was a phenomenal play on the SPY puts, the 450 strike at 284. They went all the way to 450 in 20 minutes. But you could see, like, in terms of confirmations, all the confirmations was there. High of day retest, fails to break out, quickly drops. Like the chart pattern was the same as earlier today and as early as Friday, right? Wasn't expecting it to drop this much. I think that had a lot to do with the lower highs where it failed to break out compared to Friday. I was looking for a move to like 447, 448. It went all the way to 446. So that's crazy. So in terms of if this pattern keeps repeating, we could see something similar where SPY tries to have another little spike, then it sells off again. We'll see. But yeah, SPY's a little bit tricky right now. Got to give it some time for the moment. I think the more predictable stocks, the more predictable plays are going to be, like I said, the DWAC, the Robinhood, the Amazon especially, the Snapchat. Those are going to be the main predictable ones. And then we'll see how this YOLO works out. I did a YOLO, into the close on the dip on the Pfizer calls at 3:57 p.m. So we'll see how that works out on the whole earnings play. Anything can happen with earnings. So, you got to take small size and only put in what you're willing to risk. At the end of the day, it's a lotto. Could hit big or you can lose like 80, 90%. So we'll see how that plays out. But yeah, that was a strong comeback for the day. So guys, I will keep you updated. It looks like there is going to be some good trades lined up for tomorrow. But so far so good on terms of the SPY, crushing the puts into the close today. But yeah, guys, that is going to wrap up today's lesson. Make sure you are subscribed to the channel so you can stay up to date. And I will see you guys within the next video. For those of you within Trader Society, I will see you guys tomorrow live at Market Open.